Hey guys, what's up? How's it going? Welcome back for another video. In today's video, I'm gonna be giving you guys a weekly update on my Canadian-based dividend stock portfolio, Wealthsimple Trade. I'll give you guys a portfolio update. I'll jump in and show you guys what stocks I bought for this week, and I'll give you guys an update on all the dividend incomes, and I'll give you guys an update actually on my plans going into the new year, into 2023, and what I plan on doing with my stock portfolio. Alright guys, so the first thing we're going to start off in today's video is going to be the portfolio update like usual. Our portfolio has seen a nice little jump up this morning. On our watch list, I like to kind of keep an eye on our ETFs so I can kind of just monitor whenever we do these videos what the markets are kind of doing. So in today's video, it looks like HYLD, we're going to see a nice little increase of 0.5%, as well as the overall US market. Canadian markets, at least the financials, are looking at they're sitting about even or so, so not too much going on there. But we did see a nice little jump inside the portfolio. We have just under $112,000 in total Canadian inside of all of our accounts on Wealthsimple Trade. The TFSA is going to be our first account we're going to focus on. This is a pretty good split between US and Canadian stocks. So the one-day return, which is today, at the time of doing this video, it is December 14th, kind of around 11:40 a.m., so it's almost 12 p.m. We're up about $300. The 1 week return is about 1%, so we did see a nice little increase in our stocks overall in the past week. The 1 month return is 2%, so once again, nice little jump up from there as well. The 3 month return is up 4%, so it looks like sometime in about October, we did see a nice little rise into the portfolio, nice little increase overall. And again, you know, the dividends and all that kind of stuff is being reinvested, and that's contributing as well. And the 1 year return is almost at 0%. We're almost positive inside the TFSA, but our all-time return is still pretty well at 11%. So the TFSA is doing pretty solid. Personal account, which is more Canadian focused, is going to be the 1 day return sitting about 0 as we would expect. 1 week is up 1%. 3 month return is sitting around 1%. Once again, kind of looks like October, we've seen a nice little rise in the markets for our Canadian stocks. And then all time, our Canadian dividend stocks is sitting at about 1% return, just pretty steady increase overall. So before we go any further in the video, I just want to do a quick little shout out to today's video sponsor, Neo Financial. Neo Financial is an online company that is changing the way that Canadians spend, save, and grow their money. Neo Financial comes to you from the team that made Skip the Dishes, and they're currently at 100 million users and constantly growing, and they're currently valued at $1 billion. Neo Financial is a company with a wide range of different products and services to suit your needs. The currently big feature is the Neo Card as well as the Neo Money account. They also have Neo Invest where you can grow your money, as well as Neo Mortgage if you guys need a mortgage for a house. So some cool features of the Neo Card is as follows. You can get instant unlimited cash back, get up to 15% cash back on your first purchase when you open an account. You also can get an average of about 5% across the different thousands of partners that Neo has. And you can actually use the cash back however you want. You can put it towards your total to pay it off, or you can put the money into your money account and spend it as you please. The biggest feature that I'm a big fan of is no annual fees. You literally don't have to pay anything to own the card, so it's a nice little supplementary card that I use. Usually when I go out to get groceries or I go out and eat, I think it's really good for that. And I want to share with you guys a new feature that Neo just recently launched, and that is Neo Perks. So this is a cool program where you guys can get cool rewards and get further bonuses and cash backs with a small monthly fee. There's all kinds of different categories. So if you do lots of traveling, if you do lots of different everyday essentials, so you buy, you know, your regular stuff, you can get different, you know, basically more bonuses, more cash back by paying a small monthly fee. There's premium access you can get. There's food and drink if you like to go out and eat at restaurants and stuff like that. Fitness if you like to do fitness stuff, as well as mobile and personal data protection. So there's all cool different programs from the Neo Perks. You guys can go inside your account and activate them from there. So make sure you do the math to make sure it's actually worth it and whatnot. And if you guys are a big spender and you do a lot of traveling, or you do buy, you know, a lot of groceries and stuff like that, it's definitely worth checking out. If you guys want to sign up for the Neo Card, be sure to check out the link in the description of this video. You guys can earn $25 when you sign up for the Neo Card and get $10 when you open a Neo Money account and deposit a minimum of $50. If you guys think Neo might be a good product for you, definitely check it out. So we're going to do a quick little update on the stocks I bought for we'll do an update since December. So basically what stocks I bought since the beginning of December. We'll just filter this out here on a Wealthsimple Trade account so you guys can actually see. Like I mentioned all the time in all my videos, if you guys want to actually be notified and kind of keep track of my buys in my portfolio, check out my portfolio in Blossom Social. Everything is kind of in there if you guys are watching this video and you kind of want a more real-time or up-to-date kind of snippet on my portfolio. But anyways, we'll look at the market buys for December. Not too many crazy things going on today. We didn't buy a ton of stocks. I'm kind of just trickling some money here and there that I have. I do have some money coming in towards the end of the month, most likely. but we bought TD, we bought ATD. These stocks both did really, really well. TD had a really good earnings report at the beginning of the month. Both of them also had pretty significant dividend increases as well, so that was pretty sweet. I did buy some more of our covered calls to bring that up, right? I'm kind of focusing on bringing some of those, increasing the yield, as well as kind of bringing up those positions to be a little bit more bigger inside the portfolio, though still relatively small overall. And then we bought some AQN. I am buying a little bit of AQN as time goes on. I know a lot of people feel kind of indifferent about the stock, but I still think the company has potential long term to do well. And we're just kind of dipping in a little bit here and there. Again, we don't actually hold a lot, so it's not a big holding. It's just a little bit of fun there, taking on a little bit of risk. But once again, we're being smart about it. And then we bought some more VDY, we bought some more HYLD, and then I did buy a little bit of CNR. Probably looking to maybe buy some more CNR today. I do have a little bit of cash today, so I'll probably throw that inside the portfolio as well. Alright guys, so we're using a cool little website to basically track our upcoming dividend payments. So this is Track Your Dividends. This is a summary of our portfolios. We can divide it between the different portfolios we have. So we can go on my personal account and see the different upcoming dividends. We could go on my TFSA as well and see all the upcoming dividends. We'll just do a summary so we can see a bird's eye view of our entire stock portfolio and see all the different upcoming dividends. We can also see the recent dividends from all the different months here, all the way going back to last year. So that's actually pretty cool. But here's the actual tickers here. Here's the calendar. So hopefully you guys can see this and make sense of this. Basically what we have here is we have the tickers on the side, and then we have the payment dates here. So this is just an estimation of when we're going to get our dividends. We can obviously see that, December is going to be a pretty big month. We have a lot of dividends coming in, as well as January. Estimated about $400. So that's super cool. We have ATD estimated to pay us a dividend. They actually just recently increased their dividend by 25%, in case you guys don't know. Super cool. CNR is giving us a small dividend. Canadian Tire giving us a small dividend. Fortis giving us a small dividend. HDiv and HYLD are covered calls and giving us some nice juicy dividends as well. Manulife actually giving us a pretty good dividend, as well as Power Corporation of Canada. We have Severia Corp giving us a buck or so. And then we have our big ETFs paying up our big dividends. And whenever the big ETFs always pay our dividends, which basically come in quarterly, it's always going to be a big month, right? And we can see that. So that's super cool. Going into the new year, there's not a lot of dividends recorded right now. So obviously it looks a little bit lower than normal, but we're really just focused on December. But I want to show you guys basically how cool it is to get paid small little paychecks that add up to be quite a bit of money from all these different companies. Here's a quick update on our monthly dividend income for the past couple months on the channel. So our stock portfolio, December income is sitting at $10, so obviously not a lot of dividends for this month. November we finished at $166, so that wasn't too bad. And then October we had a pretty good gain of $512. So December looks to be a good month, but right now obviously we didn't get too many dividends, but that will slowly increase as they come in throughout the month. And our total dividends inside our portfolio is sitting around $4,414. And as we approach the end of the video, I want to kind of do a quick little update on some different things and talk about more about our portfolio and how, when you think about investments and you think about overall returns, it's something important. We see a lot of times on different platforms, even on social media and stuff like that, there's a lot of misinformation about things, and I think everybody needs to take everything into consideration. You need to look at the overall picture. So one thing I'm going to talk about really quickly in this video is just going to be comparing like the overall return of a stock. So in terms of stock growth, if you go on Google and you look up a chart or something like that, you'll see stock growth, but you won't see the overall yield and how that reinvested can contribute to your overall return. So I'm actually using Wealthsimple, which is what separates the dividends from the stock growth or the stock appreciation. So we can see kind of individually like how much of my stocks are growing in appreciation, and we can see how much I'm getting in revenue, which is dividends, and then we can see combined together the difference in the total return. So here's my overall portfolio. We'll start off with VFE, which is a growth-based S&P 500 ETF. You guys are probably familiar with it. Hopefully you guys can see this numbers. I know it's a little bit big, but I'm trying to fit this all on my screen here. But we have revenue right here on the top, kind of near the right here. This $1,600 is going to be the dividends, right? Revenue equals dividends in this case. Going on the right side, this is going to be the total gain. So this includes dividends plus stock growth. And then this right here is the percentage of the total gains. And then on the right side, we have stock growth. So it's a little bit confusing layout, but I'll just kind of refresh this here. This on the right side right here is going to be the stock growth. So this is percentage of stock growth, stock appreciation. This is the gain in dollar amounts. And then on the right side, we have the total gains and the revenue. So super confusing, I know. I don't know why it's laid out like this, but this is the way it's going to be for some reason. So if we look on the right side of VFE is traditionally a growth-based fund, right? It's got low dividend yield, not a lot of dividends. But even a fund like VFE, which has low dividend yields, actually, it adds up a lot. we have a 0.96% return in terms of stock growth inside VFE inside my portfolio. So that's $535 in growth. But if we add the dividends and then reinvest the dividends over time, it actually goes up to a 4% gain. Like, that's a significant gain. And that's about $2,000 and $214. So that's almost double the return when you include dividends. And remember, VFE is not a dividend focused fund. If we go to VDY, which is more dividend focused, you're going to see even bigger difference here. So once again, stock growth, it's about 9%. That's $2,000, $2,700. But if we add in the dividends, and VDY I think has about a 4% yield, if I'm not mistaken, actually gives us a return of 22%. That's $7,000. That's significant difference. So if you don't include the dividends, you don't include that, you're going to be missing out a lot. Another good example of this would be TD, right? This is our typical Canadian dividend stock with decent growth. 11.5% in growth inside my portfolio at $600. But look at the dividends, 24% growth in dividends, $1,000. Like, that's significant. Let's go over to a funny example. Everybody talks about covered calls, right? I've seen this a lot of places. People talk about covered calls not being a good return, a good investments. The stock appreciation goes down, and it is true, 100% it goes down. But if you hold the funds for the long term, the reality is that the dividends will definitely make a big difference. And we can see here, this ETF got hit pretty hard because it's more tech focused, and the US markets got hit pretty hard, specifically tech stocks. So in terms of appreciation, it's down negative 16%. So if you were to look at a return or something like that, you would think, oh man, that's not really good. But look at the dividend returns of this fund. It's up $620 in revenue. So really, I'm only sitting at a negative 3% return. That's not bad, all things considered. That's really not bad when you think about it. So 16% can be super misleading, but if you had that dividend yield and you reinvested it during the dip, I'm actually only at a negative 3% return. So big difference here. Even stocks like AQN, obviously AQN is kind of an interesting position right now, but it's down negative 44% in stock growth. But actually, if we include the dividends I got, it's only down negative 35%. So that helps a little bit. Obviously, it's not a good example, but you guys see what I mean. And last but not least, we'll kind of take a peek at some of the bigger yield companies. So some of the bigger yield companies that have in my portfolio is like Manulife or POW, like in terms of stocks. So, Manulife is a funny one because I've been investing in Manulife over the past couple of years, and they've had pretty good yield, pretty good dividend increases. The stock price is actually down negative 2% inside my portfolio, down $24, but it's actually up 22% if you include the dividends. So once again, you always have to look at the dividends. POW is kind of in the same situation. So a lot of these beaten down stocks, you buy them when they dip, you get those nice dividend yields, you reinvest them, and then when the stock prices go up, you get super mega nice returns. And that's why people always say buy the dip, right? Last thing I'm going to cover with this is going to be HDIV. So this is the Canadian Hamilton market sector. Once again, stock growth is about 2.59%. Include the dividends, I'm up 6%. Pretty solid. So again, always look at their total return. Always factor this stuff. Everybody's portfolio is going to be different. I just think it's important to consider those things. And I hope this kind of little snapshot in this little video kind of helps to kind of prove that point, because I think a lot of people really miss this. So anyways, guys, I hope this kind of helped you guys out. I hope it helped you kind of make sense of some of that stuff, and using some of these tools can definitely kind of make your life as an investor just a little bit more easier. Alright guys, so quick little recap on things. So my plans for the future with the portfolio is going to be more or less the same. We're going to keep investing money into our portfolio. I do have a little bit of money coming in from the month of December, so we're going to be focusing on just, putting that throughout my portfolio, just buying our regular stocks and keeping things kind of boring yet simple, but yet effective. Our portfolio has done pretty decently this well, all things considered. Some people, during the market for this year really got their portfolios beaten up pretty bad. But you guys can see like how having a balanced portfolio of Canadian stocks, US growth stocks, and then dividend stocks, and then different type of income stocks, it really does help to bring things together so you have a nice diversified portfolio. And that's basically what our portfolio is. So going into New Year, we are gonna have a little bit extra cash, so we will be putting that inside the portfolio. And like usual, guys, I'll give you guys the updates and all along the way. I do have a little bit more free time now than I usually do, so I will be uploading more videos and publishing more content. And hopefully going into New Year, I can keep that up and keep going. But anyways, guys, I hope you guys enjoyed the video. Like usual, if you did like the video, give it a big thumbs up and subscribe to the channel. Take care and have yourself a good holidays.